Hey guys, this is Alex. I wanted to discuss this trade that I took on the SPY ETF. This is the first live trade using real money on the channel here. And I wanted to discuss how I identified it and how I identified this long trade prior to the Federal Reserve minutes meeting and NVDA earnings. So let's get into it. So I entered the market long on May 24th at 9:11 a.m. I entered 7 contracts with a 415 strike, May 30th expiration on SPY at $1.35 per contract. I exited today, May 26th at 12:47 p.m. at 595 per contract. This ended up netting me about $460 profit per contract, and it netted me over just over $3,200 on the entire trade. So the thesis behind this trade was the market was falling for the past few days. On Monday and Tuesday, it fell. And there was a Federal Reserve minutes meeting on Wednesday. So let's get into the chart. So on the chart right here, May 24th. Oh, and by the way, I am recording this on my smartphone. I don't have my computer with me today. Um, so May 24th, right here at 9:11 a.m. 9:11 a.m. is approximately in this range. So I longed the S&P 500 calls, or not the S&P 500 calls, the SPY ETF calls over here in this range at 9:11 a.m. So it was, I longed around here at 410.35. And the way I identified this trade was I noticed that there was a major passive buyer there. I was able to see it on the heat map of the liquidity service that Thinkorswim offers, QuickBook, and I noticed that there was a passive buyer there absorbing all the orders. And keep in mind that the market has been falling on Monday and it also fell on Tuesday. And the thesis behind this trade was that retail traders had given up on longing the market because there is 2 consecutive days, and then the time I entered this trade, the market was flat. And I was also aware of the fact that the Federal Reserve was going to meet and NVIDIA had earnings. With those two events in mind, with the fact that retail had been giving up trying to long the S&P 500 and there was a major passive buyer there, I ultimately made the decision to long the market due to the fact that a bearish sentiment amongst retail traders with a massive passive buyer sitting there absorbing the liquidity made for the perfect reversal, and the thesis was that the Federal Reserve was going to begin sparking a bull run for the rest of the week. What ended up happening was that Fed officials debated the need for a rate hike at the last meeting, the minutes show. This meeting was basically interpreted by traders to be bullish because of the fact that if they're debating on the need for higher interest rates, then it means that the current status quo is effective, which then means that we should be able to long the market and that the S&P 500 is safe for now. And I longed before the meeting. The meeting actually was at 11 a.m. or 11 a.m. Pacific time, which was 2 p.m. Eastern time, and I longed at 9:11 a.m. And this was the news that I was waiting for. The exact words from, or not the exact words, the almost verbatim of what was stated by the officials was that they are going to have a pause on rate hikes and they were going to determine whether further rate hikes were necessary after the pause. So basically, like as I mentioned, just I'm going to repeat myself, is that if the status quo is fine right now, then what's going on is good for the market. So I entered in long before the Federal Reserve announced that news, and I stayed in long into NVIDIA earnings because of the fact that every single time we entered into that area where the S&P 500 was getting absorbed, it was at the same exact time there was a demand area for NVIDIA shares. And every single time the NVIDIA shares were in demand, the S&P 500 was in demand. And what ended up happening on NVIDIA, oh, and by the way, I am exclusively more, not exclusively, but more of an index trader. I prefer the indexes as opposed to individual stocks. What ended up happening with NVIDIA was that the stock soared all the way from 299 points to almost 400 points, or which is approximately an 80-point change, about a just a massive jump due to the fact that earnings were good on AI news. And this NVIDIA earnings report fueled the market and helped the market continue. And the reason why I exited my trade just before the market closed, was because as the market was closing, we rallied into an area where there were lots of sellers. And in this area of selling, I decided to sell today on Friday as opposed to holding over the weekend. Oh, by the way, the index, the S&P 500 index or S&P 500 ETF closed at 420, which means that my call options were 5 points in the money with $500 or $500 of intrinsic value. And I also wanted to mention that the reason I exited today as opposed to holding them over the weekend was because there is going to be lots of volatility next week concerning the direction of the market because of the federal, I mean, not the federal, the debt ceiling talks amongst politicians in the United States and whether the United States is going to default. So I exited because of the uncertainty of how the meetings are going to continue. And I wanted to preface it for the fact that my original plan was to enter in at 410 to 410.5, which I accomplished. I entered in the market at 410.35, as you can see here. May 24th at about 9 a.m. is about right here. So I entered in the call options at approximately 410. I got in at the bottom and I sold at the top just because of the fact that there was massive buying, and as the market rallied, it attracted lots of retail participants and it closed in an area of supply up here. So the plan was to buy here at the low, 510 and 0.35. And my original plan was to sell at 419, but I ended up selling at 420.4 because of the fact that there was a massive supply zone at 420.4. And I noticed that when I got to my exit point, or my original exit point, 419, there was lots of volume and shorts covering, which is a bullish indicator, which was enough liquidity to move us into the supply zone where we close in the weekend. So that is the lessons that I learned from this trade. I learned to identify areas of demand and then areas of supply and capitalize off of them. So as you can see, timestamps in the video at the beginning, I got in at 9:11 a.m. on a Wednesday, and then I exited today near the market close at 420. I got in at the bottom and I sold at the top because of being able to identify supply and demand zones in the market. And I also got exited because I noticed that as we entered this supply zone, yields began to rally. And I did not feel comfortable holding a long position in an area of supply where there was a massive seller with yields rallying. And yeah, those are my lessons. I ended up capitalizing right here, got almost the entire 100-point move over a 2-day span, and the profit was just over $3,200. So there you go. That's the newest video for the channel. And yeah, uh, just learning about the market. I already passed my SIE, and we'll see where this goes. Just continuing to identify areas of buying interest and areas of selling interest. Have a good one. I'll see you around, and leave a thumbs up and subscribe. If any of you guys are in the trading game, let me know if you want to connect and do trading, build a trading community. But this is where I'm at right now. And have a good one, guys. Have a good weekend.